Barks Alpha here, reporting for Newshound from under the Frösobron in Sweden with your 24-hour crypto news roundup. On today's bulletin, 60% of US big banks building on Bitcoin. Arctic blast lowers Bitcoin hash rate. Blackrock files for Bitcoin income ETF. VanEck launches first spot AVAX ETF. And WeMade adds Chainlink to one-pegged stablecoin alliance. Let's dig. It seems the wall between traditional finance and digital assets is coming down, as nearly 60% of the top 25 US banks are now actively developing or piloting Bitcoin-centric services. This shift sees major institutions building Bitcoin products, such as Morgan Stanley and Bank of America, the latter of which authorized its advisors to open the crypto product door to its $3.5 trillion wealth network. Facilitated by greater regulatory clarity and the build of institutional capital, which now controls nearly a quarter of all spot Bitcoin ETF shares, banking giants like JP Morgan and BNY Mellon are gradually treating Bitcoin as a standard financial instrument on par with stocks and bonds. Sticking with Bitcoin news, and the severe winter storm sweeping across the United States has caused one of the largest short-term hash rate drops in Bitcoin history, as miners power down to protect the national grid. Approximately 200 exahashes per second, roughly 23% of the global network, went offline between January 23rd and 25th, stretching average block times to 12 minutes. Unlike previous emergency failures, this move was largely deliberate, with major US pools like Foundry and Luxor participating in demand response programs to free up electricity for households during the freeze. While the temporary slowdown impacted revenue for miners, analysts noted a successful stress test of Bitcoin's growing role as a flexible, dispatchable load for the modern energy sector. In other news, the world's largest asset manager is doubling down on crypto with a new S1 filing for the iShares Bitcoin Premium Income ETF. Designed for investors who want BTC exposure without the stomach-churning volatility, the fund uses a covered call strategy, actively selling call options on its own IBIT shares to generate consistent cash flow. While this strategy caps potential upside during a massive rally, it provides premium income distributions, a move that signals the second phase of the Bitcoin ETF evolution, moving from simple price tracking to sophisticated yield engineering. Speaking of ETFs, the altcoin ETF boom reached a new milestone as the VanEck Avalanche ETF, AVAX, officially began trading on the Nasdaq today, January 27th. As the first and only US-listed fund providing direct exposure to AVAX, it differentiates itself by offering investors not just price returns, but also staking rewards directly through the fund structure. According to reports, VanEck is waiving all sponsor fees for the first $500 million in assets until the end of February, after which a suggested 0.2% management fee will apply. The launch follows a shift in the regulatory climate under the new SEC leadership, which has streamlined the approval process for major-cap digital assets beyond Bitcoin and Ethereum. Last up, and blockchain gaming giant WeMade has integrated Chainlink Labs into its global alliance for KRW stablecoins, strengthening the infrastructure for one-pegged digital assets. Chainlink joins a high-profile consortium, including Chainalysis, CertiK, and CentB, to provide critical Oracle services and data integrity for StableNet, WeMade's dedicated stablecoin mainnet. While South Korean regulators remain deadlocked over whether to allow non-bank entities to issue stablecoins, the alliance is positioning itself as a compliance-first infrastructure provider, focusing on on-chain verification and secure cross-border remittances. The move is a proactive step towards building regulated rails ahead of official policy decisions in Seoul. That's it for today, dogs. Remember to share with the pack. Keep your noses to the ground, and your ears pricked so you never miss a beat. Reporting for Newshound. This is Barks Alpha. Yes, I do.